Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Donald Trump picks hedge fund executive Scott Bessent for Treasury Secretary. Bessent has indicated he will back tariffs and tax cut plans. Stocks and bonds gain and the dollar falls as traders embrace Scott Bessent as a measured choice that would inject more stability into the U.S. economy and financial markets. Plus, Axios reports that Israel and Lebanon may be nearing a ceasefire deal. It has just gone 8 a.m. across the Emirates. I'm Juana Versace in Dubai, everybody. Happy Monday. It is going to be quite another busy week. But for now, let's digest the news that the Trump administration has finally picked a cabinet choice for Treasury Secretary. So that was big news over the weekend. Markets are reacting to the nomination of Scott Bessent, namely because he has this 3x3x3 mantra. 3% GDP, that's the objective. 3% deficit, also another objective. And then the goal is to increase oil production by another 3 million barrels per day. Now, how achievable these 3x3x3 targets are is a question for markets, but the reaction has been quite positive. This is the picture for S&P futures, still through 6,000. We're about 0.4% higher, so pushing through with some optimism this morning as we head into the European session. 10-year yields, we've seen a bit of a rally, actually. We're sitting at 4.34 towards the end of the week last week. We sort of stopped at around 4.4%, so we've rallied 5 basis points over the course of the last 24 hours, namely because of the comments vis-a-vis deficit reduction. That is positive for the bond market. The USD also dropping somewhat, down 0.5% as well. Again, the deficit targets, or at least the communication that Scott Bessent has spoken about vis-a-vis wanting to reduce the deficit is negative for the dollar, but positive for bonds. This is why we're seeing that reaction today. And then Brent also in focus, slipping a tiny bit, down 0.3%, just shy of $75. Remember, this time next week, we're going to be digesting what OPEC Plus decide to do vis-a-vis their production cuts into the next quarter. Switching over the terminal chart today, just to highlight to you that as we talk about markets' expectations for the U.S. economy, this also means that in terms of what the market is pricing in terms of cuts, has started to reduce somewhat as well. There's less than 25 basis points priced in across the next 2 meetings combined. So at some point, we're talking about a 25 cut at every meeting almost, and now we're sitting at less than 25 basis points priced in over the next 2 Fed meetings, suggesting that December, of course, is not a done deal at all. All right, let's check in on how markets in Asia are faring as well. Avril is in our Singapore studio. What's the reaction been like in Asian markets today, Avril?
It's been pretty positive on, who Trump is picking for Treasury Secretary, the idea that this is going to be market friendly, and perhaps also we might see a gradual approach to tariffs. So that's fueling the gains in Asia stocks and currencies today. Dollar yen sitting at the lowest level in 2 weeks. And we're also seeing that focus on Indian markets still, that climb on the Nifty, helped along by a continued recovery in Adani stocks from Thursday's plunge. But the outlier today is what we're seeing in China, really struggling to recoup losses from that Friday sell-off as traders brace for the imminent return of Trump. Jumana.
Avril, thank you so much. Well, President-elect Donald Trump has tapped a hedge fund executive, Scott Bessent, as Treasury Secretary, as we were just talking about, in a clear nod to Wall Street. Bloomberg government editor John Herskovitz joins us for more. Well, the reaction on Wall Street has been pretty positive today. What message do you think Donald Trump is trying to send with the nomination of Bessent?
Well, it seems that he's trying to show that he is going to appoint someone who will be an institutionalist, someone who is going to have a steady hand on the economy. This is an important position. It's the chief salesman of U.S. bonds, the minder of the U.S. currency. And Trump has shown that he wants someone with global experience, someone who is in tune with what the market knows and understands. And that's what he appears to be doing in nominating Bessent for the Secretary of Treasury. The markets have reacted well to this, and it seems like this is the type of person, like in the first Trump administration, with Stephen Mnuchin, someone who was very much in tune with the markets and took a little bit of the sting out of the America First policies that had been advocated by Trump and many people around him.
Well, all of us have been trying to piece together what Bessent thinks about the economy, drawing on a couple of op-eds that he's written, some interviews that he's given in the last couple of weeks. What would you say are the policies that he tends to espouse? So what do we know about him, essentially?
Yeah, I mean, he has an extensive experience, and he has brought up some of the policies that Trump has advanced, like tariffs, but it's in a much more measured way, open for negotiations with these things. He's also backed some of the Trump's plans, like the renewing some of the tax cuts in 2017, which are due to expire. One thing that's going to be a point of concern is with the next term of the head of the Federal Reserve, when Jerome Powell, when his term comes up, if Bessent is going to be a part of that and weigh in on the decision.
Yeah, that's a very interesting point as well. The Fed, here you can see a quote that we're just putting up saying you could do the earliest Fed nomination, create a shadow Fed chair. So that's an interesting perspective as well. Bloomberg government editor John Herskovitz, thank you so much. Let's continue the conversation with Vincent Juvyns, global market strategist at JP Morgan Asset Management. Good to have you with us.
Good morning.
So the market is sort of pinning their hopes on this magic mix of 3% GDP, 3% deficit, if they can get there, and perhaps more extra oil barrels to be brought to the market. Is the market getting ahead of itself in terms of what this Treasury Secretary can actually achieve?
Yeah, what you just flagged is just music to the ears of market, and we're seeing them reacting quite well this morning. I would add maybe on that, obviously what we know about Scott Bessent and the interview he has given recently is also probably a more gradualist approach toward tariff. And obviously in the economist community, one of the concerns would be an aggressive move on tariff. Clearly in his recent interviews in the press, he has voiced concern maybe of going too fast on that front, and certainly from moving more gradually. So that would also be a way to appease, let's say, the concern of Wall Street and the economist community.
Yeah, so the reaction that we're seeing in the market today is valid in your mind?
Yeah, definitely. We have the Trump reflationary agenda with obviously maybe someone in charge of the economy of the Treasury, which is probably more gradualist, which will adopt a more conciliatory, let's say, approach to Trump policy.
Yeah, it is pretty impressive with everything that has happened the last couple of years. And there was a lot of concern that the Fed hiking cycle may actually tip the U.S. economy into a recession, hard landing, soft landing. At the end, we really got no landing. And what people are talking about now is a re-acceleration of the U.S. economy into next year. That is translating to perhaps a lot more hopes on how the cyclical parts of the economy are going to perform. Are you in that camp as well?
It's maybe too early to speak about a re-acceleration. That may come maybe later in 2025, but clearly the no landing and probably deceleration still from now, still given the tighter monetary policy that we have in place, and which is probably going to remain in place, as you rightly alluded to. No rate cut expected this year anymore, less than 3 cut expected next year. So the US will have to live with this high interest rate environment. So we're looking at growth environment converging towards strength, 2.5%, before maybe reaccelerating later if we have additional tax cut, if we have additional reflationary element in the US economy. But this US exceptionalism will to some extent remain in place on the economic front, but also on the market front.
Yeah, people have been turning really bearish on the prospects for the European economy, namely because their hands are tied fiscally. Trump is going to come back in and ask them to allocate even more to defense spending, and the numbers have been going up. But in an environment where there isn't a lot of leeway fiscally and you have to devote more to defense spending, other things are going to move down in terms of priority. And I just wonder whether all of this is actually very negative for prospects for European growth because they won't be able to combat the US fiscally.
No, it's true that it's a depressing environment, but it's well in the price. You look at the PE of most European market, it's well embedded in the price of equity market at the moment, and it's true that there are a lot of challenges ahead. As we said recently in our outlook, which have just been published, Europe is always, at best, when it's challenged, it manages always to reinvent itself. It's unfortunate, but we need to be challenged that way to really find ways to reinvent yourself. We've done that many times in the past. The COVID was definitely probably the last time when we came with this next generation EU fund, which is supporting growth in many economies. When you look at the periphery growth at the moment, this is definitely an element of it. It's probably not a market to be overweight at the moment. It's probably a market to maintain into portfolio. Definitely when you're thinking about an income approach when deploying your capital and equity market. When you look, for instance, at the UK equity market, you have a 5% yield at the moment if you add up dividend yield and share buyback. So that's quite enough to wait for better days.
Yeah, well, you speak about the UK, and the valuation story has been the story in the UK for many years now. The dividend story has also been the story in the UK for many years now. I also get the sense that there is quite a lot of skepticism towards the new Starmer administration and some of the growth objectives that they are trying to achieve, also alienating some of the wealthiest individuals and financial institutions in the UK probably isn't the best approach, as the Trump administration has realized. So what do you think is going to be the catalyst for further UK performance, or if at all, any performance coming out of the UK?
I would say valuation come first, income second, which is a function of valuation. From a European perspective, you look at the UK today, it's more stable than what we have in Europe. They have a budget at the moment. We are struggling to form one in France, in Belgium, in a couple of countries which are subject to the excessive deficit procedure. So that's already reassuring to some extent. Obviously, the tax of the wealthy, that's something quite common in Europe at the moment. France is not scoring better on that front. But clearly, for me, income at 5%, that's quite a nice value proposition for 2025. And again, the challenges are well in the price. You add up some interesting sectoral composition, a bit more healthcare, a bit more commodity-related sector, which, if we see growth picking up in the US and possibly Asia, we will see, that could be also beneficial for such a market.
Yeah, and so going back to the US market, tech has obviously been the dominant sector, Magnificent Seven. Do you see any undervalued tech opportunities in Europe to look at right now? Or is it predominantly going to come from the US?
Unfortunately, at the moment, except a few well-known names in Europe, it's clearly a US focus at the moment. This said, we are all enthusiasts about AI globally and what it drives in the US, but everyone is looking at where AI is going to produce the most benefit. And it's for all those companies which are going to adopt AI. Europe, for instance, stands out in terms of healthcare business, research in that environment. Regulation is not helping at the moment to really use AI in the production of new medicine or vaccine, but it will come. And definitely looking at how it will cascade down towards other sectors could be beneficial for Europe. The financial sector is definitely one of them. You have seen a couple of CEOs recently announcing that we're deploying co-pilots for all their workforce. We will see many sectors, AI maybe transforming this sector. That could be an opportunity for Europe.
Yeah, interesting. Very good to chat to you, and also to get your perspective on Europe as well. So it's not just about the sentiment, but also about what's priced in, essentially. Vincent Juvyns, Global Market Strategist at JP Morgan Asset Management. Thank you. Well, still ahead this hour, we speak to Deutsche Bank's Marco Pagliara about the bank's emerging markets wealth business and growth in the Middle East. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Axios is reporting that Israel and Lebanon are on the cusp of a ceasefire agreement after meetings and behind-the-scenes messaging over the weekend. The news website says U.S. envoy Amos Hochstein threatened to withdraw as a mediator unless Israel moved towards a deal in the coming days. Axios also says Netanyahu met with senior ministers and intelligence chiefs on Sunday. Bloomberg's managing editor for the Middle East and North Africa, Honor Ant, joins us right now. All the signs are indicating that we're getting closer and closer to a ceasefire agreement. What do we know about the contours of this deal, should it actually come to pass?
This deal is primarily based on an existing UN resolution that pretty much worked although not perfectly until the war between Israel and Hamas began last year. And the main premises are pretty much the same. And the most important part about this deal, should it come to pass, as you said, is the fact that it will force not only Israeli troops to move away from Lebanese territories, but also it will force Hezbollah to move about 30 kilometers to the north of the Lebanese-Israeli border with its heavy weaponry. And that's the single most important issue that's been been a sticking point between the two sides, because it wasn't quite clear who would oversee the implementation of that particular point, which was a sticking point, especially for the Israeli side. But it looks like the two sides are coming closer to an understanding where, at least based on the Axios reporting and other weekend reports, is that a US-led mechanism would oversee the implementation. And if there are any breaches, obviously it would be on the US to basically work to tackle them.
Yeah, because the longevity of the ceasefire is obviously one of the big questions out there. From the Israeli Prime Minister's perspective, Netanyahu, how will this be received back home? Is it coming from a position of strength or a position of weakness? Because, of course, one of the war objectives, the Lebanon war objective, was to restore security to Israel's northern border. The fact that they may be inching closer towards signing a ceasefire agreement, is that going to be well received back home, given that there's no assurances at this point that that security can be restored?
Well, clearly this is what the Netanyahu government will be trying to portray it as that it's coming from a position of strength, because Israel has arguably been a lot more successful in its war against Hezbollah than many would have expected. People expected Hezbollah to be able to fight back in a lot stronger way. That didn't turn out to be the case. And if this deal comes to pass, and if the transition period turns into a permanent ceasefire, it will allow the Israeli government to move about 60,000 people who have been relocated or displaced by the war back to north, back to their homes. And that would be a big win for Netanyahu, and therefore would really boost his standing at home.
Yeah, well, let's see how this all plays out. Clearly, the Biden administration are making a very last big push before the term is up. Honor, thank you very much for the reporting. Honor Ant, Bloomberg's managing editor for the Middle East and North Africa. Well, coming up, keeping the IMF on side, Kenya weighs how to draw down loan financing from the UAE. We'll have this story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now, let's get more on the UAE's widening efforts to build influence in Africa by extending finance across the region. Bloomberg has learned that Kenya plans to draw down its loan from the Emirates in tranches to remain within the IMF's borrowing thresholds. For more, Bloomberg's Andiro Ganga joins us from Kigali. Andiro, what do we know about Kenya's plans to access this money? Clearly, to begin with, it's quite interesting that the UAE are providing some form of financing to Kenya. What do we know about their gradual drawdown approach to the loan?
Jumana, good morning to you. So what we know so far is that early 2025, Kenya will be accessing about $700 million from this loan, and then more disbursements will follow as and when there is need for it. The timelines for these disbursements might change depending on cash flow demand coming from the Kenyan government. And this loan is really interesting because it comes at a time where Kenya was forced to shelve its finance bill, and this bill was aimed at raising about $2.7 billion. And because of deadly protests, this bill was pulled back by the government, and they're looking at a budget deficit of about 4.3%, hence the necessitation to go and take this financing. The Emiratis are more than happy to provide it. This is part of their larger effort to try and build influence across the African continent and challenge the dominance of US and China. And we saw this in the course of the year when they were able to bail out Egypt for a total of $35 billion.
Andiro, what is the IMF's major concern vis-a-vis this loan facility between the UAE and Kenya? What is their major concern vis-a-vis some of the debt vulnerabilities and the financing costs on the Kenyan economy?
Jumana, so for context, 4 years ago, Kenya went to the IMF and took a loan of about $3.6 billion to try and avoid a debt crisis. However, this program came with limitations as to how much Kenya can borrow to remain within the debt sustainability threshold. Now, if we put this new Saudi loan into perspective, $1.8 billion, interest rates of about 8.2%, the IMF is raising concerns because it says that sometimes these loans come with interest rates that are higher than growth rate, and then in the long run, it becomes a debt burden. And to a country like Kenya, where it has debt vulnerabilities, that already poses a greater risk in a form of way. The IMF has also said that Treasury needs to weigh the impact of this loan vis-a-vis their fiscal and debt outlook. And Treasury is also admitting to this, saying that the $1.8 billion loan is above the $1.3 billion threshold that the IMF has set for them when it comes to commercial lending. Kenya is also expecting to get some money from the IMF in the course of 2025 after a review of about $850 million. And they're looking to also supplement their revenue-raising mechanisms. They are looking to revive some clauses from the finance bill that they were forced to pull. And they'll be also borrowing from the international market at about $2.8 billion. And they'll be looking for $3.2 billion from the local market.
Andiro, such a fascinating story. Thank you so much for bringing it to us. Bloomberg's Andiro Aganga. Now for a look at some of the other stories we're following today. Gautum Adani and his nephew Sagar Adani have reportedly been summoned by the SEC to explain U.S. allegations in a $250 million bribery case. News agency PTI says they have 21 days to respond to the legal requests. Meanwhile, a U.S. agency says it's still conducting due diligence after last year agreeing to a $500 million loan to an Adani Group-backed port development in Sri Lanka. The Chinese government says it started a special program to crack down on what it calls unfair internet practices. Regulators say these include manipulating rankings to hype up hot topics and infringing on people's rights to do business online. Beijing is urging portal operators to rectify issues and enhance algorithm security. The program is in effect until February 24th next year. Well, let's round out the segment taking a look at how equity futures are performing today. It's a sea of green out there. S&P futures above 6,000, so 0.5% firmer in trading. Nasdaq 100 also up about 0.6%. Eurostoxx futures up 0.8%. So all of this mostly in reaction to the news that Trump has selected Scott Bessent to be Treasury Secretary. It's deemed to be Wall Street and market friendly. So this is the reaction you're getting across all of these equity futures today. Now, coming up, priced out property buyers get creative as Dubai's markets soar. We get all the details next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Donald Trump picks hedge fund executive Scott Bessent for Treasury Secretary. Bessent has indicated he will back tariffs and tax cut plans. Stocks and bonds gain and the dollar falls as traders embrace Scott Bessent as a measured choice that would inject more stability into the U.S. economy and financial markets. Plus, in this week's Mideast Money segment, priced out buyers look at alternative ways to gain a foothold into Dubai's red-hot property market. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Well, a lot of green on the board behind me today. Equity futures piercing towards a positive, up about 0.5%, still above 6,000, namely in reaction to the news that Trump has selected Scott Bessent, a hedge fund investor, to be the Treasury Secretary nominated for that role. And the market is taking it quite well, namely because he has written several op-eds about the desire to reduce the size of the deficit in the U.S., to push the economy from a growth perspective, and also to increase the amount of oil production that the U.S. is bringing. So the reaction is pretty telling. You can see 10-year yields have actually rallied about 5 basis points today, sitting below 4.4, which has been a key support level, now 4.35. This perhaps encouraged by some of those remarks vis-a-vis deficits. The USD also trading on the back foot today, down 0.5% as well. And again, that comes back to wider deficits being bad for the USD. But in this situation, what we are seeing is the USD pulling back again again as the market unwinds some of those dollar positive trades over the last couple of sessions. The Brent complex trading just below $75 here, slipping somewhat in trade, about 0.4%. We're keeping a close eye on how developments are into that OPEC Plus meeting over the course of next weekend. So something to bear in mind, a big event coming up for the oil market. In terms of Fed expectations, so this is quite interesting because as you can see from this bar chart here, the market has really priced out a lot of the rate cuts that were priced into the market, especially over the next couple of meetings. And in fact, over the next two meetings combined, there's less than 25 basis points priced in. So it is not a clear-cut deal that the Fed are going to cut at the December meeting or even at the subsequent meeting. Combined together, there's only about 25 basis points priced in. All right, let's check in on how markets in Asia are faring as well. Avril is in a Singapore studio, and the handover, for the most part, has been pretty positive, Avril.
Yeah, but there is a caveat to that, as you're alluding to, and that is what we're seeing in Chinese stocks, and that's not participating in the climb in the Asia Pacific today. CSI 300 Hang Seng entering the lunch break today with declines of about 0.5% after already declining 2-3% on Friday. Now, that selling was part of how traders are bracing for Trump's return, but also what's happening domestically. The fiscal stimulus rollout has been really frustrating for investors. We've been seeing earnings disappointments time and again, particularly the Chinese tech names that last week lost $41 billion in market cap among the big tech names. The Hang Seng Tech has, come down about 20% since the October peak. And this chart, courtesy of MLive's Mark Cranfield, shows you a bit further, puts things into perspective on what we've been seeing on these Chinese tech gauge and how after October, when it kind of formed the golden cross where the short-term 50-day moving average moved above the 200-day moving average, it's kind of lost its spark recently. So this suggests the Hang Seng Tech is losing upward momentum. So keep that in mind as we see the declines in Chinese equities today. Joanna?
Well, you've got to flag to us the next time there's a golden cross in the charts. Avril, thank you very much. Avril Hong in Singapore. Well, moving over to the Middle East region, Dubai has become one of the world's hottest property markets, with prices surging for 17 consecutive quarters. Wow. The boom has pushed ownership further out of reach for many buyers, but as a result, interest in real estate investment trusts is growing, as well as fractional ownership apps that require as little as $136 in payments. So for more, we bring in our money and power reporter, Laura Gardner-Cuesta. That's interesting. The first time I hear of these apps. So you can get a slice of the Dubai property market for $136. How does that work?
Exactly. I mean, it's a really novel idea, and it's as you said, prices in Dubai have been rising consecutively since the end of the COVID pandemic. Many investors are priced out. Not everyone can afford to buy a villa on the Palm, but apps like this essentially give you the opportunity to, for as little as $136, you can buy a slice of property. So in particular, in a story that we published over the weekend, we looked at an app, a company called Stake, which allows this fractional investment idea. So retail investors that have the opportunity, and the cost to entry is a lot lower.
Yeah. Also in the article, I thought it was interesting that you've been writing about the possibility of some real estate investment trusts, otherwise known as REITs, around the rest of the world. And I think that's interesting because, more broadly speaking, it's been a rough time for REITs around the world. What's to say that they're going to be successful in Dubai?
So look, in Dubai, they haven't been a very successful product. In the past, we've had some issues around corporate governance. The profitability hasn't been particularly stellar, but we've reported that Dubai Holding, which is an investment conglomerate owned by the Emirates ruler, is planning to list 2 real estate portfolios as early as next year. It might take the shape of a REIT. This would give investors, again, the exposure to commercial real estate like malls and residential properties, which are income generating and would be managed by the government in this case. So I don't know if there's going to be a wave of listings, and we'll see how successful they are, but there's certainly a push from the top to make this product more accessible. And there's also been a few regulation changes, so visas linked to long-term visas linked to property investment and loosening of foreign ownership rules. So in general, I think there's a bit of a push from Dubai to make this product more
and meanwhile,
accessible.
the rest of us have to feel the brunt of the prices that keep going up.
Well, yes.
Laura, thank you so much. Laura Gardner-Cuesta, our Mideast Money and Power reporter. All right, let's stick with Dubai and turn to private wealth. The city's financial hub is now home to family offices that control more than $1 trillion in assets. Dubai has seen an influx of high net worth individuals over the past few years. It is an area of huge growth for the finance sector. And our next guest has been involved in the expansion of services to target the ultra high net worth segment. Let's bring in Marco Pagliara, the head of private bank for emerging markets at Deutsche Bank. I'm just going to actually tie in what Laura was saying about property and just how much prices, residential prices, commercial prices, property prices have been climbing over the course of the last couple of years. How closely linked is wealth to property prices, do you think?
Thank you for having me here, first of all, Jumana. It's a pleasure. I think it's quite closely related. I think we have a preferential observation point. We're very focused on ultra net worth and family offices. We have been out of Asia and out of the Middle East, an incredible run in terms of property houses led by some of the centers where wealth has established itself, of course, Singapore, Hong Kong, and the Middle East. And we are very focused on Middle East as a place of accumulation of wealth in our segment of focus.
Do you feel that that Dubai, relative to these other spots that you mentioned, relative to Singapore, relative to Hong Kong, has flourished relatively in the last couple of years, or is it pretty much as it always was?
I think that there is a very important momentum in the Middle East and in Dubai in particular, especially when it comes to the establishment of family offices, ultra net worth, establishing residence here, and of course driving the real estate market in that context. And I think you've seen some of the geopolitical shift benefited this region, and I think that there is a strong and increasing focus of people from many different nationalities. I think Dubai is in an incredible convergence of interest where you have Europeans, Asians, and especially non-resident Indian that look at Dubai as a place for business and for establishing their residence, and that is driving the market.
I'm curious to see, just in terms of demographics and also geography, where the fastest growing segments are. Can you give us some more color?
Yes, I think, as I said, our business is rather focused on the ultra net worth side and family offices. We think that the family office emergence in emerging markets, which is the region that I run, is a very relevant phenomenon. I think compared to the so-called developed world, I think the family office is a more recent phenomenon in this region and in Asia. And I think that you have an increase in numbers and an increase in sophistication, and so we are seeing significant momentum in that segment.
What about the onboarding and KYC process? Is it more stringent here than in other jurisdictions, simply because there are many nationalities in Dubai, and some of them come from jurisdictions that are under sanctions by the West?
That is a very clear and present topic in our business, of course, in the industry in general. I think that the standards are very high, and I think they've been increasing over the last few years in the emerging part of the world. So I think while historically one could say that there were different standards, right now it's very much in line and requires for the financial industry quite a bit of focus on documenting clients.
Yeah, that's for sure. It feels as though also that you're not the only one with this idea. I've spoken to many people who are looking to capitalize and find opportunities with the expansion of wealth and, as you say, ultra high net worth individuals residing in the UAE. What do you do to differentiate yourself? What is the suite of products that you can offer that others can't?
I think to cover effectively family offices and ultra net worth individual, you need a specific value proposition. And so I think Deutsche Bank has a quite unique combination between a strong presence in capital market and an institutional access to capital market. We are one of the largest world lending platform available to ultra net worth individual. We're very strong on the structured lending side. And ultimately, we have the ability of managing sophisticated investment for family offices in a professional way. So I think the combination of these three factors is a winning element.
So do you think being sort of like a one-stop shop gives you a competitive edge there?
Absolutely. And I think also the ability of offering clients customized solution. I think that there has been a trend of reaching for efficiency and scale in the industry, sometimes forgetting about the need of the client that wants in that segment customization and personalized solutions. So listening and offering tailored solution is very important.
So can I just ask you, in terms of what these clients are looking to invest in right now, where are they seeing the biggest opportunities, and how excited are they, say, around anything to do with AI and the hype that we're seeing in that space?
I think it's not a recent trend, the one of family offices and ultra-net-worth individuals looking in direct investment on the side of financial market, more liquid financial market. Of course, the emergence and the boom of AI has, on the venture side, attracted a lot of interest from families. So family offices and ultra-net-worth individuals are always after the holy grail of direct investment, but at times sourcing this type of investment in a sustainable way is more difficult than it will look like.
Let me ask you a final question, because it's staring at us right in the face. Oil prices have started to drop, and there are lots of bearish signals coming up. What happens to the wealth in this region if oil drops to $50?
I think what is incredible of this region, and if you look at the experience of UAE and Saudi, is a concerted and visionary effort to actually diversify the economy. So, of course, there is a significant reliance on the traditional oil and gas business, but I think that there are very credible efforts to diversify the economy in renewable energies, in hospitality, and in related services industry. So I think we're hopeful and we're very positive about the dynamic going forward.
Great. Well, thank you so much for joining us on our show. Great to hear your perspective on the opportunities here. Marco Pagliara, Head of Private Bank for Emerging Markets at Deutsche Bank.
Thank you.
Morgan Stanley has secured regulatory approval to locate its Middle East headquarters in Saudi Arabia, joining rivals including Citigroup and Goldman in expanding their presence in the kingdom. Under new rules, firms must have a regional base in Saudi with at least 15 employees or risk losing business with the kingdom's vast network of government entities. And Saudi Arabia's sovereign rating has been upgraded by Moody's for the first time since it was assessed in 2016. The agency moved the rating up a notch from A1 to AA3, its fourth highest grade, driven by continued progress in the kingdom's economic diversification and a better outlook for the non-oil sector. The move puts Saudi on par with the likes of Hong Kong and Belgium. And for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Coming up, Nvidia CEO Jensen Huang calls for preserving global cooperation amid growing trade tensions between the U.S. and China. We'll get the latest on the world's most valuable company next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Nvidia's Jensen Huang has called for preserving global cooperation amid growing tensions between the U.S. and China. The CEO of the world's most valuable company was speaking at a university in Hong Kong, where he was receiving an honorary doctorate. Let's bring in our tech reporter, Animal Jewelers, who was at the event and I believe managed to actually speak to Jensen Huang. So just give us a sense of what you were able to discuss with him.
Yeah, that's right, Jemana. Actually, we sort of had to sharpen our elbows to get through the crowd over the weekend. But Jensen Huang was in Hong Kong to receive an honorary doctorate in engineering from one of the science and technology universities here. And, of course, for any students in attendance, I mean, what a way to finish off your academic careers by having Jensen Huang also there present. He was at the ceremony. You can see here when he's receiving that award. But then afterwards, he took to the podium and gave a speech that really urged for the need for global cooperation. Nvidia, of course, is a business. I mean, it's not only got those headquarters in the US, it's getting a lot of its business from China. It has major suppliers like TSMC in Taiwan. So it's walking a very tight balancing act here between those different interests, but really emphasizing that need for harmony. Not to say, of course, that he isn't thinking about what President Trump-elect means for his business either, because after that ceremony, we actually had a chance to speak with him at a presser, and I asked him exactly that, how that rising tensions between the U.S. and China could undermine that call for cooperation. Take a listen.
I don't know what's going to happen with the new administration, but whatever happens, we'll balance simultaneously
oh my God, this is so good. Look what he's
laws
wearing.
And policies, continue to advance our technology and support and serve customers all over the world. We'll continue to do that, and we'll be able to do that just fine.
continue to abide by the US rules, but that's really the big question mark. Do we see further restrictions on exports of the most advanced technology to China?
Annabelle, well, great visuals there. I was just commenting. Really interesting to see everything that was going on at the same time. But look, you also spoke to Jensen Huang about Samsung, the progress it's making there and having some of its most advanced AI memory chips certified. What did he have to say?
Yeah, this one was particularly interesting. So as I said, we had sort of the chance throughout the day to try and catch him a few different times. And when he was returning to the campus from his lunch break, I managed to grab him for a couple of questions to hear about Samsung in particular, because last week when there was the earnings call with Nvidia, Jensen Huang actually called out a number of their major suppliers, and Samsung was a notable absentee from that list. Now, Samsung as a company, you can see the share price reaction today. It's rising up as much as 3%. But over the course of 2024, the stock has slumped around 30%, and that is with the concern that the company could be missing the AI boom. What it needs to do is to have its most advanced AI memory chips certified. It's really working through that, and that's exactly what I wanted to find out. How is that progress going? Do we have any sort of timeline on that? Jensen Huang said they're working with Samsung to get that done as fast as possible, and again, that share price reaction up as much as 3% today.
Excellent reporting, Annabelle. Thank you so much. Animal Jewelers in Hong Kong with exclusive access to one of the most notable people in the world right now. All right, coming up, Iran is said to be planning nuclear talks with European nations, the first since President Masoud Pezeshkian took office in July. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Gina Schoeman in Dubai. Iran reportedly plans to hold talks about its nuclear program this week with European nations, including the UK, France, and Germany. Tehran last week said it would ramp up its nuclear fuel-making capacity after it was censured by the UN atomic watchdog. For more, Bloomberg senior editor Bill Ferries joins us now. So this story of the weekend being reported by one of the Japanese news outlets, I think is quite interesting. Iran is saying that it's willing to start opening up conversations again, negotiations potentially with the European counterparts. How should we read this messaging?
Well, Iran is obviously facing a really complex geopolitical situation right now. It's in an on-again, off-again conflict with Israel. Its proxies in the Middle East are in a full war with Israel. It's looking at the prospect of Donald Trump returning to the White House. So it's sending out, I think, some signals here that it's willing to be flexible in some of its policies. It has a new president, as you mentioned, and they want to try to protect what they can of their economy at this point, which is still under a large number of sanctions. So having some outreach with the UK, with Germany, with France, these are three key members of that P5+1 group that came up with that negotiated the nuclear accord in 2015. Donald Trump left that accord in 2018, of course, but there's still some provisions of that agreement that could kick in if the international community feels like Iran is being obstinate on its nuclear weapons, nuclear program transparency. So there are still some sanctions that could kick in if this next IAEA report goes against Tehran. So I think they're perhaps trying to get ahead of that a little bit and show that they are willing to talk.
Yeah, so on one hand, they're showing a willingness to talk, but on the other hand, you're seeing stories reporting suggesting that they want to increase the number of centrifuges as well and grow even further their nuclear capacities. So again, it's a lot of mixed messages coming through from Iran. How should we read all of these various stories that are coming out simultaneously?
I think you can read it as kind of a carrot and a stick approach to the rest of the world. The carrot being, hey, we're willing to have some talks. We're willing to perhaps hold off on how much we enrich our stockpiles of uranium. They are saying that they could increase their capacity to enrich uranium, which they say they would use for their peaceful nuclear power program. But those centrifuges could be quickly used to produce higher grade uranium that could be put to use in a nuclear weapon. So they're saying they'll increase the capacity. At the same time, they're saying they're willing to hold back on the level of enrichment. So it's a mixed message that says, on the one hand, we're willing to talk. On the other, we have some tools at our disposal to make things a little bit more complicated for the world if we go in that direction.
Yeah, and Bill, I've got about a minute here, but I'm curious to hear what you think the Trump administration, the incoming Trump administration, has in terms of leverage that the Biden administration did not have.
Well, certainly, depending on when this IAEA report comes out, the Trump administration, if it's in office at that point, could very much weigh in on tougher sanctions on Iran. I do think when you look at the foreign policy team that Donald Trump is assembling, including Mike Waltz as National Security Advisor and Marco Rubio as Secretary of State, those are two people who aren't inclined to be very soft on Iran. They are very much Iran hawks, and I think Iran sees that. On the other hand, Donald Trump has always signaled his willingness to make a deal. And if there's a deal to be had, I think Iran is trying to figure out what the contours of that agreement might be. And that would, perhaps mean scaling back their nuclear ambitions.
Yeah, fair. Bloomberg senior editor Bill Ferry is on this very important regional story. Quick look at equity futures before we head out for the first hour. All of the equity markets are leaning towards the green. Euro stocks actually leading the charge today, up 0.8%. So that is the handover as we get into the second hour. But that is it for the first hour of Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. Stay with us for the second hour as Jennifer Zabazaja joins me. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Donald Trump picks hedge fund executive Scott Bessent for Treasury Secretary. Bessent has indicated he'll back tariffs and tax cut plans. Stocks and bonds gain and the dollar falls as traders embrace Scott Bessent as a measured choice that would inject more stability into the U.S. economy and financial markets. The Adani Group reassures creditors that it has enough cash after U.S. bribery charged against it triggered a sell-off in the conglomerate stocks and bonds. Well, good morning again, everybody. It has just gone 9 a.m. across the Emirates. I'm Joanna Bersecci in Dubai.
And I'm Jennifer Zabazaja in Johannesburg, where it has just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Well, Jen, when you and I were speaking back on Friday, one of the big discussions going into the weekend was whether we're going to get visibility on who the next U.S. Treasury Secretary was going to be. Well, we have got that visibility now. It turns out that Trump's pick is actually Scott Bessent, one of the original choices, hedge fund manager. The reaction in the market has been quite positive, as you can see behind me, namely because he is seen as someone who is market friendly to Wall Street, hedge fund manager, of course. And we have spent the past couple of days piecing through some of the comments that he's put forward in news outlets, suggesting that he is supportive of growth-enhancing measures, supportive of tax cuts, but equally is in the camp of wanting to reduce the size of the U.S. deficit. So on the back of that together, what we are seeing is U.S. futures leaning towards the green, up 0.5%. So stock markets taking it quite well. We've actually seen a rally in 10-year yields down to 4.35%. No doubt the comments about the deficit and wanting to reduce the size of the deficit is aiding the bond markets here. So we're down about 5 basis points. The dollar also on the back foot today, down 0.5% as the market unwinds some of that U.S. exceptionalism trade that was getting priced in. And then Brent also in focus, down about 0.5% today. Unclear whether this is in reaction to Scott Bessent talking about wanting to increase U.S. oil production further or just holding pattern ahead of that OPEC Plus meeting this coming weekend. As for what is priced into the markets, you can see from this chart here that the market continues to price out rate cuts into the rate curve for next year. The next couple of meetings only combined have about 19 basis points of cuts priced in, 14 basis points of cut priced in for December, and about 5 basis points only priced in for January. So a lot of that rate cutting exuberance has been priced out of the market in the last couple of weeks. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, just give us a run through of what's going on.
Yeah, Jumana, I think it's that reaction to who Trump is picking for Treasury Secretary. And remember, there were these concerns the past couple of weeks what President-elect Trump's policies would ultimately mean for economies and currencies outside of the U.S. That's really what was factored into Asia FX. So today, against the backdrop of that dollar slide, we're seeing Asia FX climbing. The Korean won is the top gainer, but also seeing dollar yen around the 154 level, though it is on the Japanese currency erasing some of the gains from earlier in the session. What's also interesting is that today, despite that pressure a bit taken off from given the greenback slide, we're still seeing the PBOC coming through with support for the yuan via its fixed 500 plus pips that were stronger than the traders' estimates. It also left the MLF unchanged for another month. Special mention for the rupee today, climbing alongside other Indian assets. And this is after Modi's decisive victory in state polls. This is what we're seeing across currencies in the region, guys.
Thanks so much, Avril Hong in Singapore for us. Well, let's just stick with the top story. President-elect Donald Trump has tapped hedge fund executive Scott Bessent as Treasury Secretary in a clear nod to Wall Street. Bloomberg government editor John Herskovits is joining us now for more. So, John, clearly the markets are interpreting this early this morning. But the interesting thing is taking a look at really the discussion prior to this nomination was announced. How are you interpreting Trump's messaging to Wall Street with the nomination of Scott Bessent?
I think that by this nomination with Bessent, that Trump is signaling to Wall Street that he's putting in charge of this department someone who is market savvy, who understands the role of the dollar, the importance of stability in this position. We've had a lot of concern about Trump's America First policies. We've had some choices for cabinet positions that have really garnered huge backlashes, like the appointment for Attorney General. But with this one, you get a more of an institutionalist and someone who is on board with some of Trump's policies, albeit tempering them and a bit more moderate than what some people in Trump's world may want. And this is a person that seems amenable to Wall Street, and markets are reacting positively to it. We've seen, as we've seen a few minutes ago, that markets are showing good signs for this. The dollar's weakened for the first time in about to levels to about 2-week lows. So there's been a good reaction to it.
Right. Right. And John, you mentioned those in Trump's orbit. In particular, we did hear from Elon Musk not too long ago saying that Scott would be the business as usual choice. When we think about the policies that he does support that maybe align with what Trump is pushing for, what would you say is at the top of the list?
Well, I think it's the tariff policy that Bessent's also on board with the Trump tariff policies, albeit with a little bit more caution than we might find with some of the people in Trump's orbit. So we're going to see backing for this. Also, there are tax cuts that were part of Trump's first administration that need to be renewed. We'll see Bessent on board with this. And there's also questions about what role he might play with regard to the Federal Reserve and a possible replacement for Jerome Powell when his term comes to an end. So those are some of the things to look out for. So it may be the business-friendly person, but also there's a Trump element. He ticks a lot of boxes in both worlds.
That's a good way to describe it. John Herskovits, a Bloomberg government editor, thank you so much for bringing us the reporting on the new Treasury Secretary nomination. Well, traders are viewing Donald Trump's Treasury pick as a measured choice for the U.S. economy and financial markets. Bloomberg and Live strategist Mark Cranfield joins us for more. Well, Mark, we've been tracking the price action in the markets very closely this morning. What we're seeing is equities like it, bonds are rallying. The USD is trading on the back foot. How likely is it that these moves are going to continue? And how much of what we're seeing today is just a function of positioning to begin with?
Yeah, there's definitely a lot of positioning going on and adjustments to that. And we're going to hear a lot more about Mr. Bessent's three arrows. He seems to have borrowed a phrase from Shinzo Abe when he was becoming Prime Minister of Japan. So these three prongs, which are getting US growth higher, it's getting taxes down and pumping more oil. Now, if he achieves those things, as he's been talking about in some interviews recently, investors are going to view that as generally very positive for US assets, which means that the initial knee-jerk reaction in selling the US dollar may not be the correct one going forward. It may be a lot more nuanced than initially people are expecting here, because just because the positioning was already a bit long US dollar, we've seen it sell off a bit. But now people will have to think a lot more about specific currencies and whether or not those policies really work or not in relation to that. In terms of the US Treasury yield curve, there's going to be maybe more moderation in terms of the issuance next year. People initially thought when Trump was going to win the presidency, there would mean a lot more bond issuance as big spending. But Mr. Bessent looks as though he could be a voice of reason, and that will be reined in to some extent. So in terms of that, the Treasury curve could perform a lot better maybe than people were expecting, but there's still a long way to go. And of course, execution is the big thing here, and that's why the bond vigilantes are probably still watching this very closely, because any hiccup in terms of the deficits next year, they'll be all over the bond market, and they will certainly punish the US for issuing too much. But certainly Mr. Bessent appears to be a safe pair of hands. If he gets confirmed as Treasury Secretary, it's certainly going to be seen as a good thing on Wall Street, but what it actually means for the US dollar is not necessarily the first reaction we saw today.
Yeah, speaking of the USD, I'm keeping a close eye on what's been happening with the yen. We've pulled back from the levels of around 156, so yen has gained ground. And I wonder whether that's in anticipation of the next meeting, which Ueda signaled could be a live one.
Yeah, and traders are beginning to come that view. If you look at the pricing in the rates curve today, for the December Bank of Japan meeting, we finally crossed the 50% threshold in terms of traders thinking there could be a rate hike at December. We're now looking at something like a 56% chance that the Bank of Japan would increase rates by 25 basis points, which is the highest we've seen for a long time in that pricing. So conviction is growing that the Bank of Japan is getting closer to. We've still got 3 weeks to go. There's time for more Bank of Japan speakers to try and push the needle in that direction. But crucially, what we're also waiting for is the Japanese media to get on board as well. We haven't seen the kind of stories that we saw in March or July when we were very close to the rate hike from the Bank of Japan. Investors will need to see like a double confirmation from the Japanese press that yes, this really is a live meeting, the rate hike is possible. But it's certainly moving that way, and you can see the performance in the Japanese bond market not nearly as good as the Treasury market, which suggests traders are really getting quite serious about the possibility of a rate hike coming in December.
Mark, thank you so much. Fascinating stuff, and all eyes will be on that December meeting, as you said. While Bloomberg's Analyst strategist Mark Cranfield was speaking, I just want to bring you a couple of lines that have come through, namely some comments that have come through from the Israeli ambassador to the U.S. saying that the Israel-Hezbollah two sides are close to a truce deal. Earlier on in the show, we were talking about the Axios reporting over the weekend suggesting that a ceasefire deal is very close to getting agreed upon. And remember, Amos Hochstein, the Mideast envoy, has been in the region over the last couple of days. He met with the Lebanese key officials and then flew over to Tel Aviv to meet with Netanyahu and other senior cabinet members. And this morning now we're just getting some lines from Israel's ambassador to the U.S. saying that the two sides are actually close to a truce deal. But it's not just that. I also want to bring you some banking news, breaking news in the banking space. Also UniCredit, but this time around it's not Commerzbank related. This time we are getting a flash saying that UniCredit has now launched an official takeover bid on Banco BPM. Now this is a domestic bank, one of the smaller domestic banks. There had been speculation swirling for years as to whether or not UniCredit would actually go ahead and officially launch a takeover bid. And for many years, the CEO of UniCredit had resisted the temptation to do so, namely on valuation concerns. It looks as though we've got to a point now where UniCredit think the timing is right for them to officially launch that takeover bid. So this is a domestic consolidation play. UniCredit have launched a takeover bid on Banco BPM, also keeping a close eye on the developments with their slow build-up of a stake in Commerzbank in Germany as well. Well, coming up later this hour, we will be speaking to Aniseh Bassiri Tabrizi from Control Risks on how Iran is reacting to the IAEA's censure and the ratcheting up of tensions with the West. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Let's focus in on South Africa now. The country's central bank cut its benchmark interest rate by 25 basis points at the end of last week to 7.75%. It said its model showed rates easing further and stabilizing a bit above 7%. So let's bring in Gina Schoeman, Citi's South Africa economist, and she's also the head of CEEMEA Economics. So Gina, great to speak with you. Let's just start with Governor Netanyahu's messaging, many people interpreting them as overly cautious. When you think about the scale of geopolitical risks that are out there right now, do you agree with his messaging and the stance that he took for the outlook?
Yes, good morning. Thanks for having me. I do agree with it. Look, this is naturally and has been for quite some time a cautious, relatively hawkish, very orthodox central bank and highly independent. And of course, when you're dealing with a small open economy like South Africa, we know that the currency, the rand, is one of the most highly tradable EMFX currencies out there. So naturally, when you're dealing with a more uncertain backdrop, especially post-US elections and not knowing exactly which way things are going to go, you're going to take a more cautious approach. That said, as much as they keep telling us that future rates will be data dependent, as they should, they also did carve out a very low inflation trajectory with balanced inflation risks, which means that it's quite clear that there is an opportunity to cut again.
So then, Gina, let's just stick on the rand, because we were just taking a look at some of the movements that we've seen with the rand against the dollar. I mean, it's been swinging quite a bit over the past 2 weeks. Do you anticipate more volatility for the currency, especially given a lot of the uncertainty then?
Well, perhaps certainly in the near term, as things start to settle in the US and all the administration is put together and we start seeing exactly what the stance is taken geopolitically and particularly on China in regards to tariffs, etc. But at the same time, remember that South Africa is enjoying this post-election government of national unity constructive phase, given that reforms are taking place. And there's a much more positive sentiment about the currency and about the economy. We've just received a positive outlook by S&P regarding our sovereign's ratings, and things are looking up in terms of the growth outlook. So yes, the currency is always going to be at risk of volatility if there's volatility globally. However, South Africa's reduced risk premium should actually help it to maintain somewhat of a more resilient path than it would be otherwise.
Do you anticipate more ratings upgrades then for South Africa? Of course, one of the other things that we're paying close attention to is South Africa getting off the gray list. Do you anticipate in 2025 these reforms that we've seen potentially gets the country closer to that?
Well, it's difficult to know whether the exact upgrade of the rating agencies on the sovereign outlook and the sovereign ratings will actually take place next year. But it does look like we're much closer to that. In fact, now that S&P has given a positive outlook to South Africa's rating, if we see other rating agencies following alongside that, I think that's more than enough for 2025 to just give South Africa that stamp of approval that a ratings upgrade is likely either in late 2025 or 2026. However, let me just remind everyone, it is still very early days. There's still a lot of reform and a lot of this new coalition government that remains to be seen. So we need to build a better track record in South Africa to really affirm an upgrade of the rating. But the positive outlooks, if it's more broadly spread, will certainly be a big help in terms of sentiment and a lower risk premium. Regarding grey listing, that's something that South Africa has actually moved very quickly on. And if you look at the latest media statement from the South African National Treasury, you'll see that there's a very good chance of being removed from the grey list in 2025. I would say South Africa would be lucky if it happened as early as the first half of 2025. It's not impossible, but there is still 3 areas that would take a little bit longer for South Africa to prove itself. And so the second half of next year, now that comes with a much stronger likelihood. And again, that would be another stamp of approval that the economy is now moving in a better and stronger and improved direction.
Gina, let's just finish off on Trump's pick for Treasury Secretary. You mentioned how the rand is one of the most traded EM currencies out there. When you think about some of the policies that we have heard from Bessent at this point in time, is that a net positive for South Africa and for other EMs, or what's your expectation?
A net positive, especially based on what was expected. Remember, I think when it comes to these volatile EM currencies, especially the high-yielding ones like the rand, anything that is better than what was expected or the fear of what could have been is going to be some reprieve. So I think this week, depending on how the data goes in the US and, of course, also with South Africa, I think news of that is probably a better than expected move than what would have been otherwise, let's say, in terms of the US Treasury Secretary. So markets, I think, are probably going to give the rand a little bit of support. But again, let's also remind ourselves, that's just one piece of information amidst a backdrop of many data points and many pieces of information just this week. So it's never an easy bet as to where the currency is going to go, or the rand dollar is going to go on any given day.
That's right. We'll get US PCE. We also have October PPI for South Africa, so a few data points to pay close attention to. Gina Schoeman, Citi South Africa economist and head of CEEMEA Economics. Gina, thanks as always for joining. Jumana?
Well, coming up, India's Adani Group is seeking to reassure creditors after a U.S. bribery indictment against the founder, Gautum Adani. All the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Shumana Bersechi in Dubai. The Adani Group has released a report reassuring its creditors that it has sufficient cash flows to service its debt obligations. It is the first attempt from the group to manage the fallout from the bribery charges brought forward by U.S. authorities. Bloomberg's conglomerate media and telecom reporter PR Sanjay joins us for more. So Panji, good to have you with us. Sanjay, good to have you with us. What would you say are the options for Adani to fight some of the allegations that have been put forward?
So they had to finalize the legal recourse, and they are also in talks with their legal advisors, and they're also in touch with U.S. legal office too, because since the jurisdiction is different, and they are also contemplating taking the legal fight within India, because the companies, the founders, they've inducted as Indians. So they are also contemplating an Indian legal move also, but they had to finalize how they would be going in. And very interestingly, on Saturday, the CFO of Adani Group has clearly mentioned that this indictment is against the founders but not their 11 public listed companies, and so the companies won't be impacted with this, but they are seeking legal recourse to take this battle ahead and to restore the confidence among investors.
And how would you describe the state of the company's financials right now? How strong are the company's financials in the wake of these very damning allegations?
That's a great question. In fact, today morning, early morning, they had come out with a credit compendium. It is a compendium of all companies, all listed companies for first 6 months of financial year, the current financial year. And it says clearly it has sufficient cash balances, at least for next 28 months, to meet long-term debt obligations. That's number one. And they are claiming that they have $6.33 billion worth of cash balance to meet whatever imminent obligations, liabilities, or financial liabilities they could incur in the past. And they are also claiming that they have around $66 billion worth of asset base, so they could easily service any debt obligation, or they could go for an M&A, mergers and acquisition, or they could service a loan, a high profile loan, etc. And they're also saying that at least 62% of the revenue is coming from core infrastructure platform, and 84% of EBITDA is also coming from this core infrastructure platform.
Right, which probably explains one of the reasons why the Nifty index as a whole has sort of brushed off this news, because there's less concern about the financial continuity of some of these key groups. All right, Bloomberg's conglomerates media and telecom reporter PR Sanjay, thank you so much. Heading to the break, this is a picture for equity futures. So all of them are pointing towards the green. It is a sea of green out there. S&P futures above 6,000, 0.4% firmer. Euro Stoxx futures up 0.7%. Coming up, after running more than 24 hours overtime, COP29 finally sealed a deal. We'll have more in just a few moments.
This is Horizons Middle East and Africa. Our top stories this morning. Donald Trump picks hedge fund executive Scott Bessent for Treasury Secretary. Bessent has indicated he'll back tariffs and tax cut plans. Stocks and bonds gain and the dollar falls as traders embrace Scott Bessent as a measured choice that would inject more stability into the U.S. economy and financial markets. Plus, COP29 ends with a deal pledging $300 billion a year for developing countries. We are live in Baku with the details. But right now, it has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it has just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. We are very much focused on some of the banking news that's been breaking the last 10 minutes. But of course, the Treasury Secretary appointment is going to be driving markets today as well.
Of course, Jumana, and that's really what we are seeing with the market action, at least right now, before we see markets really open up later today. If we take a look at the board right now, S&P futures, as you can see, poised to start off the week in the green right now, up just about 0.4% above that 6,000 point right there. But as markets are also anticipating or interpreting this Scott Bessent decision, we're seeing that trickle and affect different assets differently. If we take a look at the U.S. dollar, it is weaker this morning against its other G10 peers. We're seeing a decline, though, in U.S. bond yield right now, just about 4 basis points, and we're seeing the 10-year at 4.35%. Investors really anticipating Bessent's appointment may bring economic and market stability over some of those more rash measures that potentially could have come with some other choices. And I also have Bitcoin up here on the board, regaining some momentum after a Sunday sell-off. The crypto right now trading just over 98,200. And 256, but we did see the crypto get within an inch of that 100,000 print, just about $300 away from that, but still waiting to see whether or not that actually pans out. And I also want to bring you this terminal chart because we are awaiting some key data prints later this week, including the Fed minutes on Tuesday. We're also going to get the Fed's preferred inflation gauge. That is PCE. That comes on Wednesday. It is a shortened week for the markets in the U.S. because of the Thanksgiving holiday. But if we take a look at where markets are positioned right now and what they're interpreting, markets seeing fewer than 20 basis points of cuts priced in over the next 2 meetings and potentially waiting to see what the rest of what the Fed minutes actually show about the path for Fed cuts. Let's check in, though, on how markets in Asia are faring. Avril Hong is in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, traders in Asia also mulling Trump's pick for Treasury Secretary, and it looks like the Bloomberg Dollar Index is moving off session lows and might be some reaction by traders to the initial comments from Bessent about their commitment to Trump's tax pledges. Some have already pointed out that if he fulfills expectations of being a fiscal hawk, boosting U.S. investments, that's an environment that could push the dollar higher, actually. So it makes you wonder how long this reprieve we're seeing in Asia currencies might actually last, and specifically for what we're seeing on the Japanese currency. Yes, traders seem more convinced that the December meeting is a live one, but if you look at how it's faring in terms of gains versus the other G10 peers today, like the euro or the Aussie dollar, it is paling in comparison. So it speaks to the point that I think yen traders need a bit more convincing. This is what we're seeing, though, for now, against the backdrop of that slide in the US dollar. Guys.
Avril, thank you so much for the reporting, as ever. Avril Hong in Singapore. Well, the COP29 summit has ended with nearly 200 countries agreeing to triple the amount of money available to help developing countries confront rapidly rising temperatures. The deal came after 2 weeks of intense and sometimes hostile negotiations. But some are still calling the deal insufficient and disappointing. For more, our climate reporter John Ainger joins us from Baku. He's been there the last couple of weeks, so has been really on the front seat of all of the ins and outs that have been going on, and it has been quite fraught discussions. An excellent read on the terminal this morning. But maybe let's just start with that announcement, $300 billion worth of financing. So it's a tripling of what the annual pledge was before, but still a far, far mark from that $1 trillion worth of financing that some developing countries have been asking for.
Indeed, yeah. So talks ran well into overtime and have only really just finished around 24 hours ago. And as you mentioned, that key figure is $300 billion. The aim is to eventually mobilize $1.3 trillion. But a lot of developing countries, small island states, they were looking for that $1.3 trillion to come from public grants, basically money from public coffers in developed countries to go and support things like the economic transition and also things like adaptation and loss and damage. So I think a lot of countries, particularly those poorer nations, particularly island states, have left Baku feeling a little bit disappointed, having a bit of a bitter taste in the mouth, but I think also some relief that this COP process is still on the road after Donald Trump's election victory, and a lot of fears that the US could step back from climate politics.
And there have been a lot of questions surrounding the exact definition of what climate financing is. In theory, it's supposed to be money that is transferred from rich countries to poorer countries to developing countries. The shape, the format of that assistance is one of the questions, whether it's grants or loans, but also who is actually providing the financing. And I know that China also was a sticking point at this COP.
That's right. So we've heard no end of different terms used to describe this finance goal. Some have called it an onion, some have said it's a ladder, but basically it's different qualities of finance. So in that inner core of the onion, you've got public finance, that's where the 300 billion is, but that's also including things like multilateral development banks. And as you said, a key aim of countries like in Europe, in the EU, was to get China to also pay into this goal because they see themselves as a developing country and so shouldn't be paying towards it. And we saw some sort of bridging compromise over the last few days, which means that a portion of the money that China puts into different multilateral development banks will go to developing countries, and there will also be a voluntary intention to deliver some of that money. And it doesn't, of course, include China. That also includes countries like Saudi Arabia, which is very important as well, because they've seen a lot of oil money since 30 years ago in this COP process starting. So it was really a key goal to get those countries to pay up as well.
Yeah, and we haven't even spoken about the language surrounding the fossil fuel phase out, which came out of COP28 and the resistance that there was at this COP29. We'll save that for another time. John Ainger, our climate reporter in Baku, thank you so much for getting us up to speed.
All right. Two key African central banks make rate decisions later this week, with Nigeria expected to raise borrowing costs tomorrow. First, let's discuss, though, Ghana, which has just delayed its policy decision until Friday. Let's bring in Bloomberg's Ndiro Ganga, who is joining us from Kigali with the preview. So, Ndiro, Ghana expected to hold rates later this week. This is going to be the last meeting before we see that election in December. What's behind the central bank's confidence, though, in holding rates?
Jen, we can attribute it to a couple of things. If we look at their currency, the Citi appreciated 0.2% early November after the central bank sold about $214 million to the market, the biggest sell in a week by far this year. And because of this, we saw an influx of dollars in the market, hence reducing pressure on the local currency and demand. But in the greater scheme of things, the Citi has lost 27% of its value to the dollar this year, making it the fifth worst performing currency, according to a Bloomberg index. And this is highly attributed to delays in debt restructuring. If we also look at inflation, it's quite a pain point for them because inflation has risen to 22.1% from 21.5%. And this is funded by food inflation at 22.8%. If we put that into context, the price of eggs rose by 72%, dried pepper 91%, which is going to put a lot of pressure on the central bank in their next sitting. In their last sitting, we saw them cut rates from 29% to 27%. But this was with the expectation that inflation was going to drop to about 18%. But because we're seeing inflation rising, they're likely to hold, monitor how the economy absorbs and adjusts.
And Ndiro, when we focus on Nigeria in particular, there's a number of factors that the central bank is having to juggle to really think about what to do next. What would you say is top of the list, though, for the central bank governor to determine what the decision is going to be?
Mm-hmm. Jen, this is a country where the outlook is a little bit grim. If we look at their Q3 GDP projections, it's likely to slow down to 2.7% from 3.2%. And this is attributed to high interest rate and also climate change. If we zoom in on sectors, telecommunication is expected to grow, but those gains are going to be offset by agriculture because of heavy rains. Transport is also expected to contract because of high petrol prices after the government removed fuel subsidies. In the fourth quarter, the growth is likely to be moderate at 2.9% and stay at that average, leading to 2025 undermined by a tight monetary policy and also flat oil production. But if you look at inflation, it remains a problem for them. It had cooled down in the last 2 months, but then it rose to 33.9% from 32.7%. We're expecting it to begin slowing down sometime in December and then slip below 30% in the first quarter of 2021. The currency also is still very volatile. We have FIM partners saying they're likely to trade at 2,200 naira to the dollar in the next 12 months. And analysts are now advising businesses to plan with 2,000 and avoid local debt unless inflation falls below 20%. So this is some of the factors that the central bank is likely to take into account, and we are likely to see them hike their rate.
Right, the Naira being a huge factor for the central bank. Bloomberg's Indiro Ganga, thank you so much, Indiro, for joining us today. And also in focus today, we'll get a rate decision from Israel's central bank, with economists expecting rates to be held at 4.5%. That is due at 6 p.m. Dubai time.
Well, Jen, we've had some breaking banking news in the last 15 minutes. Just to recap some of the headlines that are coming out of UniCredit, because the bank has now launched an official takeover bid for one of their domestic rivals, Banco BPM. They have put out a statement saying they hereby give notice of the decision taken on 24 November to launch a voluntary public exchange offer. They are proposing 0.175 newly issued shares for each one from BPM. So those are the terms that are being put forward. If you work it out in terms of the economics, it works out for an offer of $10.57 billion. And just as a recap for Banco BPM, that bank itself earlier this month bought a stake in Banco Monte dei Paschi de Siena, which again is part of the domestic consolidation story that is taking place in Italy. Prior to that, as we've been covering on this show, UniCredits have also been building up their position in the German lender Commerzbank as well. So at this point, it definitely looks as though UniCredits are out and looking amongst the many of their domestic peers and also other international European banking peers to build up their position in the continent, the latest being Banco BPM in Italy. All right, coming up next, we speak to Aniseh Bassiri Tabrizi from Control Risk on how Iran is reacting to the IAEA's censure and the ratcheting up of tensions with the West. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Iran reportedly plans to hold talks about its nuclear program this week with European nations, including the UK, France, and Germany. Tehran last week said it would ramp up its nuclear fuel-making capacity after it was censured by the UN atomic watchdog. Let's bring in Aniseh Bassiri Tabrizi, Control Risk Senior Analyst. Lots of news coming out of Iran the last couple of weeks. Maybe let's just start with the latest bit of information, which is that Iran may be looking to re-engage in discussions again with the European counterparts vis-a-vis their nuclear program. How should we be reading this?
Well, first of all, thanks for having me. I think this is in line very much with the commitments that the President Pezeshkian made from the onset of its mandate. He wanted to re-engage with the international community, in particular the US, the E3, France, Germany, and the UK, and also with the IAEA to address the nuclear issue. He stressed from the beginning that without the nuclear issue being solved, Iran is unlikely to be able to fix its economy because it needs a sanction relief to be able to attract foreign direct investment, and it needs $100 billion of foreign direct investment to be able to fix the economy, namely address the very high inflation and unemployment rates. So I think this was very much in the cards from the beginning. What has probably pushed back these efforts have been the regional developments and also tensions, more broadly speaking, that have been ongoing with the EU, the E3, and the US since 2022. So I think what is Iran's intention is to get that dialogue going. I think there is also obviously preoccupation with the incoming Trump administration, the sense that he is likely to bring back the maximum pressure campaign, and therefore Iran is signaling that it's open to conversation and basically do something to avoid that scenario from happening.
Aniseh, what does maximum pressure actually mean in the context of Iran? Because their oil production has done nothing but go up over the last couple of years. Sanctions have been loosely applied, not necessarily implemented. But at the same time, the economy, as we know, is really struggling. So what would maximum pressure under the new incoming Trump administration look like?
It's a great question. I think when we have seen the first round of maximum pressure, that was a mixture of a very strong sanctions, restoration of sanctions, in fact, given that Trump decided to withdraw from the JCPOA, the so-called Joint Comprehensive Plan of Action, the nuclear deal that Iran signed with the international community back in 2015, and that led to the return of sanctions after 3 years in which that was not the case. Then we have seen also the pressure extended into, say, for instance, the assassination of General Soleimani, so targeted assassination, the attempt by Trump also to create, if you wish, an anti-Iran axis through countries in the region, particularly the Gulf countries. And that attempt, as you said, basically managed somehow, but not really succeeded in bringing the economy to a collapse, which was Trump's intention. Now, I think the question that you raise about what maximum pressure 2.0 will look like is a very valid one. I think it's going to be probably a mixture of all those components that we mentioned. So sanctions, you are right that sanctions have been in place over the past few years, also during the Biden administration, but enforcement has been looser, which is why, for instance, Iran has been able to export much more oil than under the Trump administration. We are talking, for instance, about a maximum of 700,000 barrels per day during the maximum pressure campaign in the first mandate to 1.4 to 2 million barrels per day today. So we are likely to see that pressure also draw into, impact on Iran's ability to export oil, affect more significantly the Iranian economy. And this is obviously something that Iran is very concerned about.
You listed a whole bunch of factors just now, but if you look at the state of Iran now versus where it was in the first Trump administration, it's clearly a country that is weaker economically, politically, even with internal divisions. And then their key assets in the region, their proxies have taken severe blows. If you speak to the likes of Hezbollah, Hamas, does that put them in a position of weakness then, in the sense that they will be more inclined to sort of come to a negotiating agreement with the West, even though in the past they have not wanted to go down that route?
I think you are absolutely right that these signal a higher weakness from the Iranian side, but they are also stressing the fact that, for instance, differently from the first Trump administration, they are now enriching 60% of enriched uranium. And this is obviously a leverage they are willing to use in their negotiations and also intensifying their nuclear activities, as we have seen in the reaction to the resolution you mentioned. We also see a regional context, which is very different from the first Trump mandate. So I mentioned Trump's attempt to create this anti-Iran axis together with the Gulf countries. The question is, will he be able to do that again, given that the rapprochement has taken place, say, for instance, between Iran and Saudi Arabia, Iran and the UAE, and that these two countries, just to mention a couple, have seen the blowback of joining the Trump camp back in 2019, 2020. They have been targeted directly by Iran and Iran's proxies. And I think the signals is that they don't want to go down that road. So there is, a mix back for Iran. There are definitely some signs of higher weaknesses compared to the past, but also some points that they can use as a leverage in the negotiation.
Makes sense. Aniseh Bassiri Tabrizi, Control Risk Senior Analyst, thank you so much.
All right, coming up, Nvidia CEO Jensen Huang calls for preserving global cooperation amid growing trade tensions between the U.S. and China. We have the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. Nvidia's Jensen Huang has called for preserving global cooperation amid growing tensions between the U.S. and China. The CEO of the world's most valuable company was speaking at a university in Hong Kong where he was receiving an honorary doctorate. Let's bring in our tech reporter, Annabelle Jewellers, who is at the event. Annabelle, set the scene for us. What was this like?
Well, it was certainly a rock star reception that greeted Jensen Huang when he was in Hong Kong over the weekend. So he was in the city, as you said, to receive an honorary doctorate from a local science and technology university, but essentially he took to the stage there. You can see where he's receiving that doctorate, and then afterwards he went to a podium where he gave an address speaking about this need for global cooperation and also really making the case of why there should be greater harmony moving forward against what is really a backdrop, though, of course, of rising tensions between the US and China, and certainly something that he said he is thinking about. I asked him about that following the ceremony, how he's thinking about whether we will see tighter restrictions, for instance, on AI chip exports to China. And he said that, of course, they will continue to abide by the rules that are in place.
And Annabelle, you also were able to speak to him about Samsung and the progress they're having in making their own advanced AI memory chips certified. What did he tell you on this front?
Yeah, this is a very interesting story. So I managed again to grab him. This was actually our exclusive reporting because we managed to get these comments when no other reporters were around. But Samsung has really been falling behind in the AI boom, and there's that sort of perception that it is a bit of a laggard to SK Hynix, for instance, in Korea. And we've seen the stock price slide, and you can see down 27% year to date. But they are working on their own HBM chips, high bandwidth memory chips. And I asked him about that path to certification. They are working on that, and Jensen Huang said that they are looking to do it as soon as possible. So today, actually, we're seeing Samsung rising as much as 3%. It does seem that some traders do like what Jensen Huang said about, again, as I said, that certification for AI memory chips, looking at the HBM3E offering in particular, and both the 8 and the 12 high.
Annabelle Jewellers in Hong Kong. Thanks so much, Annabelle, for that reporting. Jumana?
Fun outside broadcast there for Annabelle's. All right, let's take a look at the equity futures before we head out and pass over to Daybreak Europe. And you can see all of the futures are pointing into the green. The market is reacting well to the nomination of Scott Bessent to the position of Treasury Secretary. That was Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai with Jennifer Zabazaja in Johannesburg.